We are going to have discussion on restructuring of loan accounts. Friends, what is restructuring of loan account? Friends, whenever we give any loan to a borrower, this loan is depends upon certain structure, and the entire structure is defined in the sanction letter. That what is the credit facilities, what is the amount of EMI, what is the length of repayment, what is the rate of interest, what are the security, and what are other covenants. Based upon this structure, bank decides what is the economic value of that loan to the bank. But friends, sometimes what happens that bank that borrower starts finding some types of financial difficulties. So, friends, whenever any borrower starts finding some types of the difficulties, we have to make certain changes in that structure of the loan account. And whenever we make any changes in the structure of the loan account, like change in EMI, like change in rate of interest, like change in length of repayment period, it is called restructuring of loan account. Friends, basic objective of restructuring is to preserve the economic value of the unit. It is not evergreening of the problem account. Like when supposing we have given a limit of 100 lakhs to a party and interest is applied and now balance outstanding is 110 lakhs. And borrower is not able to repay 10 lakhs overdrawn portion. So we increase the limit so that we don't have to show it as an NPA account. It is called evergreening of loan account. Restructuring is not meant for evergreening of loan account. Restructuring is meant to preserve the economic value of the unit. Friends, and this objective can be achieved only if the weakness of the account is identified quickly, viability is assessed properly, and restructuring package is implemented properly and timely. Friends, there are three words in it: weakness of the account, viability of the unit, restructuring package. Like Shakespeare has written a play in the name of Hamlet. The first line of that play was, if if music be the food of love, play on. Three words are there: music, food, and love. Based upon three words, entire book was written. And based upon our three words, weakness of the account, viability of the unit, and restructuring package, all our discussion will be on these three words, friends. Now, friends, we have given loan to a borrower, and borrower starts finding some types of financial difficulty. There may be n number of reasons that borrower may find some types of financial difficulties, but the most common reasons are, I'm going to discuss over here. The most common reason are: number one, failure or anticipated failure to make timely payment of installment. When borrower has to make payment of installment on time, but borrower is not making payment of installment on time, then we should understand that borrower is finding some types of financial difficulty. To delay in meeting commitments like crystallized liabilities under LC, etc. Bank has given open letter of credit on behalf of a borrower. Bank has issued bank guarantee on behalf of a borrower with the stipulation, with the undertaking that when the LC payment, due date payment will come, borrower will arrange the funds and give it to the bank. In case the bank guarantee is invoked, borrower will make good the payment to the bank. But at that time when LC payment is due or bank guarantee is invoked, borrower does not make payment to the bank, but bank has to make payment to the other party. Whenever bank, without borrower making payment to the bank and bank paying payment out of its own pocket to the other party, beneficiary of LC, beneficiary of bank guarantee, it is called crystallization of liabilities under LC and BG. If such situation arises, then we should understand borrower is in some types of financial difficulty. Third is excessive leverage. When we had already sanctioned the credit proposal based upon debt equity ratio of 3:1, now borrower up when at the time of renewal, we have found that borrower has taken loan from other lending institutions also. Now the debt equity ratio is 7:1, excessive leverage. Then we should understand borrower is in some types of financial difficulty. Inability to adhere to financial loan covenants. When bank has given certain credit facilities, bank issues a sanction letter. In the sanction letter, number of loan covenants are given, and borrower is required to comply with all those loan covenants, but borrower is not complying with all the loan covenants. Failure to pay statutory dues. Borrower is required to pay income tax. Borrower is required to pay GST. Borrower is required to pay custom duty, excise duty on time. But borrower is not making all these statutory dues on time. Non-payment of bills to operational creditor. Borrower is purchasing raw material on credit and he is supposed to make payment to the creditor on time, and borrower is not making payment to the creditor on time, then we should understand that borrower is in some types of financial difficulties. Non-submission or undue delay in submission of stock statement. Borrower is required to submit stock statement every month by the 5th or 7th of every month. But borrower is not submitting on time, or there's a delay in submission, delay in publication of financial statements. Borrower, every year, borrower has to publish their financial statements so that bank can renew it. But borrower is delaying some publication of financial statements. Adversely qualified financial statement. If there is some audited balance sheet, auditor has adversely qualified, given adverse remarks in the balance sheet. So in such a situation, bank should understand borrower is in some types of financial difficulty. Number 8, steep decline in production figures, downward trend in sales, falls in profit margin, etc. When at the time of credit appraisal, we had anticipated that at the end of a year or at the end of a particular period, borrower, the unit will be able to achieve that much amount of production figure, projected production. Unit will be able to achieve that much amount of projected sale. Unit will be able to achieve that much, earn that much amount of projected profit. Or unit will be able to maintain that much amount of projected margin. But at the end of that period, the projected production has not been met, or projected sale has not been met. There is steep decline, and unit has not been able to achieve that much amount of projected profit, and unit has not been able to maintain that much amount of projected margin. And then elongation of working capital cycle, excessive inventory built up. So friends, when at the time of assessing the working capital requirement of the borrower, CC limit, we have assessed that one operating cycle will complete in 90 days. Now that we have found that one operating cycle is getting allocated to 120 days, 150 days, in such a situation, we should understand that there is some problem with the account. Significant delay in project implementation. When we had sanctioned the project and we have projected that on 1st of January, the project will start commercial production. But now that more than 6 months have already passed, but project is still not implemented, commercial production has still not started. Downward migration of internal external rating. We do internal rating of all the accounts, we do external rating of all the accounts. Every year, internal rating or external rating getting downgraded. So in such a situation, we should understand that borrower is finding some types of financial difficulties. Now, as a banker, It is our duty to properly diagnose the financial difficulties the borrower is facing. And if we do not diagnose it properly, supposing there is a pain in my head, my ear, my shoulder, and if I do not diagnose the problem which I am facing it, and I do not get proper treatment on time, then what will happen? I will fall sick. And if we do not diagnose the financial problems of the borrower, then what will happen? Our borrower account will fall sick. So, what is the definition of sickness here? Because in our case, if our temperature is going beyond 98.4, 102 degree Fahrenheit, then it means we are sick. But how to come to know which borrower account is categorized in the definition of sickness? Definition of sickness has been described in MSMED Act 2006, Micro, Small and Medium Enterprises Development Act 2006 has defined the definition of sickness. What is the definition of sickness? If any of the borrower account of the enterprise remains NPA for 3 months or more, or number two is, or there is erosion in the net worth due to accumulated losses to the extent of 50% of its net worth during the previous accounting year. Supposing if a company incurs certain losses, how the losses are recovered? The losses are recovered from the capital of the company, from the promoter. So every year, company incurring losses, and due to the accumulated losses, the more than 50% capital has been eroded. Then we should understand that this company is coming under the definition of sickness. Definition of sickness. And when we find that that company is coming under the definition of sickness, as a banker, what our role is to find the corrective action plan. How to give proper treatment to the borrower account so that it becomes a healthy unit. As per Reserve Bank of India guidelines, there are three corrective action plans. One is, these are all three R's. One is rectification, restructuring, and recovery. Supposing without making changes in the structure of the account, if we can rectify the problem being faced by the borrower, it is called rectification. And if we find that we have provided rectification support to the borrower account, even then the account has not become healthy. Or even if we find that even if we give the rectification support to the borrower, even then the account will not become healthy. Then we have got no option but to do restructuring. And if we find that even after restructuring, the account will not become healthy, or if we have given restructuring support to the borrower account, the account has not become healthy, then we as a banker, we don't have any option but to go for recovery in the account. So friends, let us discuss. First step is, our duty is rectification. Rectification. What is rectification? We give hand-holding support to the borrower. Like a small child, when it starts walking, when it starts running, we hold his hand so that the child may not fall down. We give him hand-holding support. Same way, we should treat our borrower account also as our children. And whenever they require our hand-holding support, we should provide them hand-holding support. So what is hand-holding support? Friends, Mr. K.C. Chakraborty Committee. K.C. Chakraborty was chairman of Punjab National Bank and deputy governor of Reserve Bank of India. He gave his report. In this report, he has submitted certain stages that when a bank should understand that now the stage has come when borrower should be given hand holding support. What are those stages which KC Chakravarti committee has suggested? Number one, there is a delay in commencement of commercial production by more than 6 months for reasons beyond the control of promoter. Now that we have sanctioned a project loan and we have assumed that from 1st of January 2024-23, that the project will start commercial production. But now that June 2023 has already passed, still commercial production has not started. More than 6 months have passed from that commercial production has been delayed beyond the control of promoter. Beyond the control of promoter means, supposing in COVID, there is a lockdown, what the promoter can do? Promoter can't do anything. So it is beyond his control. So if it is beyond his control, then it is okay. If within his control it is there, then deliberately he is delaying it. If there is a delay in commercial production more than 6 months beyond the control of the promoter, lockdown is there, more than 6 months have passed, even then the commercial, due to that lockdown, commercial production has not started, then we should give him hand holding support, friends. Number two, company incur losses for 2 years or cash loss for 1 year beyond the accepted time frame. Now, what is loss? Net loss and what is cash loss? First of all, we should understand. Profit after tax which we arrive, it is net profit. Profit after tax is a net profit. It is achieved profit after tax after taking depreciation as an expense. If we remove depreciation as an expense, then what is? Company earns cash profit. Same way, if company incurs net loss for 2 years or cash loss for 1 year, taking out the depreciation as an expense, even then company is in loss beyond the accepted time frame. In certain type of industry, if we open a company, if we start producing certain types of industry, it is accepted that any company which starts in this type of particular industry will incur losses initially for few years. Like somebody is starting a company in telecom industry, and it is accepted time frame that in telecom industry, if you set up any company, then initially for 5 years you will incur loss. Telecom industry is highly capital intensive industry. So 5 years accepted time frame, that company will incur loss. And after 5 years, if for next 2 years company incurs net loss, or next 1 year company will incur cash loss, then we should understand that a stage has arrived when the unit should be given hand holding support. Now, capacity utilization is less than 50% of the projected level in terms of quantity. Now, when we sanction the credit proposal, we assume that at the end of the year, at the end of a particular period, company will be able to achieve that much amount of projected production. But we have found that after that period, company commercial production is less than 50%, and the sales are less than 50% of the projected level in terms of value during a year. Now, when we sanction the credit proposal, we assume that company will achieve that much amount of projected sale after a year. Now, after a year, we have found that actual sale is less than the 50% of the projected sale. So, in such a situation, we should understand a stage has arrived when the company should be provided hand holding support. So friends, so whenever we provide any hand holding support, then what happens? Then what? How do? For giving you practical example, supposing company is enjoying a CC limit of 100 lakhs. Due to application of interest, balance has become 110 lakhs. Now the borrowers deposit 5 lakh rupees as the sale proceeds in the account. Balance has come down to 105 lakh. And when he comes to withdraw it, we do not allow, you banker do not allow him to withdraw it, saying that already balance is 105 lakhs and limit is 100 lakh. We will not allow you to withdraw it unless you regularize the account. Then borrower will say that I have deposited the 5 lakh rupees, my sale proceeds. If you do not allow me to withdraw it, then how will I purchase the raw material? If I do not purchase the raw material, how will I be able to produce? If I do not produce, how will I make sales? If I do not make sale, I will not be able to make profit. If I don't make profit, I will not be able to pay dues to you. Even then, if you do not allow, then what will happen? And what is really happening? Borrower will open a current account with some other bank and start doing transaction over there. In that scenario, our entire 105 lakh will go NPA. So if we ask them, okay, you have deposited 5 lakh rupees, we are allowing you to withdraw 4 lakh rupees after doing 20% cutback. So what happens? Our balance will come down from 110 to 109. Next time we deposit 5 lakh, we allow him to withdraw 4 lakh. Balance will come down to 109 to 108 lakh. So gradually, the account will become a regular account. So by allowing this thing, we are not making any changes in the structure of the account. Account will not be treated as restructured account. So friends, if we have allowed him hand-holding support, and after providing a hand-holding support, the account has still not become healthy. Or if we feel in the beginning that even if we allow him hand-holding support, the account with unit will not become healthy, then we don't have any option but to restructure the loan account. So when we talk about restructuring of the loan account, what type of account can be restructured? First of all, we have to understand the Reserve Bank of India guidelines. What RBI guidelines says, all viable or potentially viable accounts classified as standard, substandard, or doubtful account can be restructured. What cannot be restructured? Only fraud account or willful defaulter account cannot be restructured. Now, friends, we have to now understand which account is viable. So all banks have designed their own criteria to find out that after restructuring the account will become viable or not. So all banks have designed their own policies. Please go through your bank policy. We have gone through the policies of many banks, 15 to 20 banks, and we have found out broadly what the bank's policy guidelines says, that if any account is below 20 crore, then you are restructuring it. Your internal staff member committee, official committee, will decide that if we provide restructuring, we do restructuring of the loan account, then after restructuring account will become viable. But if the loan amount is more than 20 crore, then we engage the services of a external agency which gives a techno-economic viability study, TV study. They give us they conduct a techno-economic viability study report. When they submit the report, in that report, they clearly state that after restructuring, after implementing the restructuring package, the account will become a healthy account. And we have also found out that if it's a large account, more than 100 crore, then most of the banks, they ask for independent credit evaluation of residual debt by credit rating agency. They engage the services of credit rating agency like ICRA, CRISIL, and they give an independent credit evaluation that if bank implement the restructuring package, after restructuring, the account will become healthy. Now, friend, the issue is that when we are talking about viability, your internal committee, your techno-economic viability committee, or your independent credit evaluation committee, they submit that after restructuring, account will become viable. But what is viable? We have to understand what is the viability of a borrower account. If a borrower is coming in a Mercedes car, then it is a viable account. Or if a face of the customer is beautiful, then it is a viable account. No, friends. Reserve Bank of India, from time to time, they have given certain viability benchmarks. Reserve Bank has given certain viability benchmarks. It is for the guidance of the commercial banks. What RBI has given viability benchmarks from time to time, let us have an overview of that. What the RBI says that after restructuring, if repayment schedule not to exceed 15 years in case of infrastructure, 10 years for others, means when we are going to restructure, then we have found that borrower is finding some types of financial problem. His cash flow is getting, future cash flows are getting in problem. And when at the time of restructuring, we revisit the future cash flows of the company. And depending upon the future cash flows, we reschedule the amount of EMI. Because today our balance outstanding is 100 lakh, we are restructuring it, and we, based upon restructuring, we are assessing what will be the future cash flows in the coming 5, 6, 7, 10 years. Based upon future cash flows, we decide DSCR, and based upon that DSCR, we decide the EMI. So, friends, based upon the future cash flows, if repayment schedule is not to exceed 15 years for infrastructure, if it is an infrastructure project, if the entire amount outstanding at the time of restructuring can be repaid in 15 years, or if it is other account, if the entire amount can be repaid by the borrower from future cash flows within 10 years, then it is a viable account. Number two, DSCR should be greater than 1.25 within 5 years, and on year-to-year ratio should be above 1. Now that we have found out that for a healthy account, whenever we are, first time we are assessing a credit proposal, term loan proposal, then we are saying that a healthy DSCR should be 1.5 to 1.75. Now that cash flow has come into problem, the DSCR has gone down. Now that DSCR has gone down and we are restructuring it, if due to restructuring, if during the next 5 years, right here right now DSCR is less, but next 5 years, if DSCR can come up to 1.25, but with the condition that on year-to-year basis it should not go below 1, then account is viable. But if we are giving a repayment period of 10 years, then within next 10 years, our DSCR should be come around 1.33. Then account is viable, otherwise account is not viable. Operating and cash break-even point should be comparable with the industry norms. There is no compromise on these counts. and current ratio should be around 1.17 within a period of 5 years. What tender committee said? Our current ratio should be 1.33 is to 1. And when we had first time appraised the credit proposal, the current ratio was 1.33 or 1.5 is to 1. Now borrower is finding some types of financial difficulty. Its cash flow is getting dwindled. Due to that, our current ratio has gone down to 1 is to 1, maybe less than 1 is to 1. In that scenario, we are uh, assuming we are assessing the future cash flows. And due to the future cash flows, if during the next 5 years, if current ratio can come up to 1.17, then the account is viable. It can be restructured. Debt equity ratio should be around 4 is to 1, and total outside liability to tangible net worth should be around 6 is to 1 in the next 5 years. Again, when we are first time assessed or appraised the credit proposal, debt to equity ratio was 3 is to 1. Now borrower has borrowed funds from outside agencies, debt to equity ratio is now 8 is to 1. That's why we are required to restructure it. So if we considering the future cash flows, if during the next 5 years debt equity ratio can come to 4 is to 1, or total outside liability to tangible net worth can come up to 6 is to 1 within the next 5 years, then the account is viable. Otherwise, account is not viable. Don't restructure it. Loan life ratio should be 1.4. What is loan life ratio? First of all, we should understand that. Suppose a balance outstanding is 100 lakh and we are restructuring it. And we have considered that the entire amount can be paid back in the next 10 years. So we have to consider the future cash flows for the next 10 years. So when we have assessed the future cash flow for the next 10 years, then we discount that value or the future cash flows to arrive at the present value. If we discount, we arrive at the net present value of the future cash flows to 140 lakhs. Means balance outstanding is 100 lakhs. Present value of future cash flows is 140 lakhs. 140 divided by 100, 1.4. Now future is future. It is always uncertain. If in any case the present value of future cash flows come down to 130 lakh, even then borrower will be able to repay the loan. If it comes to 120 lakh, borrower will be able to repay the loan. If it comes to 100 lakh, even then borrower may be able to repay the loan. But if the present value of future cash flows come down to 90 lakh, balance outstanding is 100 lakh, present value of future cash flow is 90 lakh, borrower will never be able to repay the loan to the bank. So, present value of future cash flow should be 140 lakh. Loan life ratio should be 1.4. Here we are having a cushion of 40%. These are the viability benchmarks which have been suggested by Reserve Bank of India from time to time. These are suggestions only. And every bank had decided their own benchmarks that is approved by their board of directors. Please go through the credit policy document of your own bank. Now, friends, during this COVID situation, when all the industries were getting the heat of COVID, heat of lockdown, every industry, every company was facing some types of financial difficulties. At that time, Government of India appointed an expert committee under the chairmanship of Mr. K.V. Kamath. That expert committee gave report about 26 sectors. What they suggested? that in these 26 sectors, they have given certain benchmark ratios. Which benchmark ratio they have suggested? That if that company, if it is coming in that sector, if its benchmark ratio is more than this, then bank can go in for restructuring. What type of benchmark ratio they have suggested? Total outside liability to adjusted T&W, total debt to EBITDA, earning before depreciation, tax and amortization, current ratio, debt service coverage ratio, and average debt ratio. Friends, 1 minute. Friends, what that committee suggested, let me explain to you. Yeah, this committee, if you go to the Reserve Bank of India guidelines, this is the Reserve Bank of India circular dated 7 September 2020. Reserve Bank of India have accepted the report of Mr. KV Kamath Committee, expert committee in toto. In this report, if you can see all the key ratios which I have told you, TOL to TNW, total debt to EBITDA, current ratio, DSCR, average DSCR. So they have given the definition of that also. You can go through the circular of 7th September 2020. In this circular, this has given the benchmark ratios of all these 26 sectors. Auto, aviation, cement, chemical, all these benchmark ratios are given. What is the benchmark ratio they have given? For current ratio, if you come to this current ratio, so wherever it is applicable, they have suggested it should be equal to or more than 1. So for all these sectors, wherever current ratio is applicable, it should be equal to or more than 1. If it is average DSCR, it should be equal to or more than 1.20 for all the 26 sectors wherever it is applicable. DSCR, it should be equal to or more than 1 wherever it is applicable for all the 26 sectors. But for total outside liability to adjusted tangible net worth, so this ratio for all this differs from sector to sector. It is as low as 3:1 and as high as 10:1, depending upon which sector the unit falls into. Then total debt to EBITDA. So it also differs from sector to sector. It was as low as 4:1 and as high as 12:1. You can go through that circular also, but all those accounts as suggested by KV Kamath Committee, expert committee during COVID, they have already been restructured, friends. Now that heat of COVID is already gone. Let us go further. Yes, friends. Yeah. Yeah, friend. Now question is, if loan or modification or restructuring, what is restructuring? Modification of loan terms and condition. If loan modification or restructuring is a mutual contract between the lender and the borrower, then as a lender, as a banker, we should be aware of the Reserve Bank of India guidelines, prudential guidelines. So, as a lender, we should be aware of. But the question is, should a borrower be also concerned with the regulatory framework? The Reserve Bank of India guidelines, he should also be aware of it or not. Yes, friends. Borrower should also be aware of Reserve Bank of India guidelines whenever we are doing any restructuring of loan accounts. What are those RBI guidelines whenever we do restructuring of loan account? What are the prudential guidelines of Reserve Bank of India? Friends, Reserve Bank of India guidelines states from the very beginning What does it say? Whenever you do any restructuring of loan account, then standard assets to immediately downgrade to substandard assets. These are the guidelines of Reserve Bank of India since beginning. If you are restructuring a standard account, it will be immediately downgraded to substandard account. But from time to time, for MSME sectors particularly, Reserve Bank of India is coming out with certain schemes that if MSME borrower is finding some types of financial difficulties and bank restructure that account, then for the first time account will not be downgraded to substandard. It will remain in the standard category. So if whenever Reserve Bank of India scheme comes and we restructure in that scheme, then our account will not be downgraded. But presently, there are no scheme applicable right over here. So these are the guidelines. But friends, what happened during COVID period? So these guidelines were not only for MSME, for all the sectors, because all the industries suffered a lot due to lockdown. So during COVID period, accounts were not downgraded due to restructuring of loan account. But friends, from the beginning, so time to time when Reserve Bank of India come out with certain schemes for MSME, so what happens? Schemes were coming up. So when in 2015, 14-15, when Raghuram Rajan became the governor of the Reserve Bank of India, he came out heavily on health of the borrower account. What happened at that time? The scheme was there that if banks restructure a borrower account, the account will not be downgraded. So banks were not recovering in the account, banks were rather managing the account. Managing means when account was required to be downgraded to NP account because overdue position more than 90 days, banks were not declaring it as NP account, rather banks were restructuring it and maintaining the same standard account. Banks were not doing it. But Raghuram Rajan came heavily. Then it was said that from 31st of April 2015, at that time, the RBI circular said that if any account is restructured from 1st of April 2015 onward, that benefit of maintaining the same status of healthy account, standard account will not be applicable. Account has to be downgraded. Why Reserve Bank of India said this thing? Because what is the difference between NP account and restructured account? In both the accounts, whether NP account or restructured account, borrower is finding some types of financial difficulties. Borrower is not getting that much amount of cash flow to make payment of EMI to the bank. So in the NP account also, in the restructuring also. So NP and restructured account are one and the same thing. Restructured account is as good as or as bad as an NP account. So Reserve Bank said the account should be downgraded. Account should be downgraded. So one condition of Reserve Bank of India, prudential guidelines of Reserve Bank of India is if you are restructuring any borrower account, then standard account to immediately downgrade to substandard account. And if it is NP account, NPA means substandard, doubtful category or loss account. If you are restructuring it, then it will remain in the same category. It will not downgrade further, same category. So in this slide, what we come to know? We come to know that after restructuring, all accounts are NPA account. Standard account is substandard and NPA account remains NPA account. After restructuring, all accounts are NPA account. So this is the Reserve Bank of India guidelines, and it should be made clear to the borrower also that if You ask that your account should be restructured. After restructuring, your account will be treated as NPA account in the books of the bank. Now coming further. Now, supposing an account has become NPA due to restructuring, how can it be upgraded? How do we upgrade an NPA account in normal course? Normal course. Supposing account is 100 lakh rupees. Then a limit sanctioned is 100 lakh rupees. Due to application of interest, the balance has come down to 110 lakh. And this overdue balance remains continuously for 90 days. If overdue position is maintained continuously for 90 days, account is treated as NPA. So now that 110 lakh balance remains continuously 110 lakh for 90 days, then we declare the account as NPA. Today we have declared the account as NPA. Tomorrow the borrower comes and deposits 20 lakh rupees, normal course. Then balance will come down to 90 lakh. Limit is 100 lakh, balance is 90 lakh. We immediately upgrade this account. It is a normal course. But friends, in restructured account, we have restructured the account. Account has become NPA due to restructuring of loan account. Then is it as easy to upgrade it as a normal course? Friends, today we have restructured the account of 100 lakhs and tomorrow balance outstanding 110, we have restructured it and tomorrow he comes and deposits 20 lakhs. Can we upgrade it? No, friends, we cannot upgrade it. Please educate your customer also. Why? When the account can be upgraded, it is not easy to upgrade an account which has become NPA due to restructuring. So when can it be upgraded? When all the outstanding credit facilities demonstrate satisfactory performance during the specified period. Means when we have restructured it, account has become NPA, then all the credit facilities should demonstrate satisfactory performance during the specified period. What is satisfactory performance? What is specified period? Let us see what is specified period first. Specified period means the period from the date of implementation of restructuring package, or we can say resolution plan, up to the date by which at least 10% of the outstanding principal debt is due. Today we have restructured an account of 100 lakhs. Till he does not pay 10% of the amount, balance does not come to 90 lakh rupees, we cannot upgrade this account. Simply speaking, today we have restructured the account, tomorrow he comes and deposits 10 lakh rupees, balance has become 90 lakh. Can we upgrade it? No, friends. There is another condition attached to it. What is that condition? Provided the specified period cannot end before 1 year from the commencement of first payment of interest or principal. Means once we have restructured it, even if the balance comes to 90 lakh, just deposit 10%, the account cannot be upgraded before 1 year. It has to remain in NPA category at least for 1 year. Number one. Number two, during restructuring, in the restructuring package, if we have given any moratorium period of 6 months for payment of principal, for payment of interest. So first that 6 months period will pass, then 1 year period will pass, and after that the account will be upgraded even provided he has deposited more than 10%. After 1.5 years, only account can be upgraded. Now supposing at the time of restructuring, you have given moratorium period of payment of principal for 6 months. payment of interest for 1 year, which is later 1 year. First, your moratorium period of 1 year will pass. Then 1 year period of a specific period will pass. After 2 years, the account can be upgraded provided he deposits more than 10%. So it is very difficult to upgrade the account if the account has become NPA due to restructuring. Due to restructuring. Friends, now what happens? May be possible that we are going to restructure a borrower account. Bank manager and the borrower is sitting across the table and discussing how to restructure it. Because we have to restructure in consultation and agreement with the borrower only. Now the borrower and banker negotiation is going on. Borrower says very clearly that whatever you do, you reduce my EMI, you increase my length of repayment, you reduce my rate of interest also. My unit will not become healthy. My unit will become healthy only if you give me additional finance of 20 lakh rupees. First, you give me additional finance. Only then, if I work, I purchase machinery, only then the account will become healthy, unit will become healthy. Otherwise, don't waste your time and my time on restructuring. Rather, you go for recovery, whatever you can recover. In that situation, bank decides in the better judgment that it is better to give him additional finance. He is speaking very sincerely. And bank decides to give him additional finance of 20 lakh. Already 100 lakh balance was there. Bank gave him 20 lakh additional finance. Now I told you in that slide that after restructuring, all accounts are NPA accounts. Now if bank has given additional finance of 20 lakh rupees, and if this 20 lakh rupees will be treated as NPA in the books of the bank from the very beginning, then no bank will give additional finance. No bank will give. Why bank should give additional finance when that additional finance will be treated as NPA in the books of the bank? So bank will not give additional finance. So what RBI guidelines states? RBI guidelines states that this additional finance bank is giving during restructuring will be treated as standard assets during specified period. Now balance outstanding was 100 lakh. You have restructured it. That 100 lakh will come down to substandard assets. It will become NPA. You have given 20 lakh additional finance. This additional finance will be treated as standard assets in the books of the bank. Means for one borrower, some limit will be standard assets in the books of the bank, and some limit will be NPA in the books of the bank. So this position can also arise if you give additional finance. But when during specified period. Number 2 condition, friends. If the restructured assets fails to perform satisfactorily during the specified period. Now, during this specified period, that credit facility has to demonstrate satisfactory performance. I told you, satisfactory performance. What is satisfactory performance? Satisfactory performance means if borrower has to pay EMI on 1st of every month, then he should pay EMI on 1st of every month. If he delays payment of EMI, then it will be treated as unsatisfactory performance. Otherwise, how much time in normal course, how much time we give to the borrower to pay EMI? EMI due today, we give him 90 days time to submit, to deposit EMI. Because if he does not deposit within 90 days, account will become NPA. But here, if he delays for 1 day also, it will be treated as unsatisfactory performance. If borrower has to submit stock statement by 5th of every month, then he should submit the stock statement by 5th of every month. If he delays, it will be treated as unsatisfactory performance. If borrower has to submit balance sheet, profit and loss account, financial statement every year within a month, within 30 days period for renewal of the account, and if it does not submit it within 30 days period, it will be treated as unsatisfactory performance. This condition will now become very stringent after the account has been restructured. Now, reading once again, if the restructured asset fails to perform satisfactorily during the specified period or does not qualify for upgradation at the end of specified period. Now specified period is over, it should be upgraded. But if it fails to upgrade during this at the end of specified period, then what will happen? This additional finance shall be placed in the same asset classification category as restructured asset. Supposing we have restructured an asset which is already in the category of doubtful category 2, D2 category, doubtful category 2, NP account. And we have given additional finance also. This additional finance will be standard assets, rest will be D2 category. Now that specified at the end of that specific period, it has failed to upgrade itself, then that standard assets, additional finance, will directly fall into D2 category. It will not travel from standard to substandard, substandard to doubtful category 1, then to doubtful category 2. No, friends. It will straightway fall down to doubtful category 2. So this is the treatment of additional finance as per RBI guidelines. Now, regarding that restructured account, how do we recognize income? In normal course, how do we recognize income? So, if it is standard assets, we recognize income on accrual basis. What is accrual basis? On a loan account, we charge interest and book it into our profit and loss account. And we give him 90 days time to make payment. So basically, he has not deposited the interest charged by us on time, but he can deposit by next 30 days, 60 days, 90 days period. We give him 90 days time. That is called accrual basis. We are charging interest, booking in our profit and loss account, and giving him time to make payment afterwards. And there is the income recognition norms is cash basis. How do we recognize income on cash basis? Unless the borrower make payment to us, we cannot book that interest into our profit and loss account. It is cash basis. Now, friends, in standard account, we charge interest on accrual basis. On NPA account, we charge interest on cash basis. Unless the borrower make payment of interest to us, we cannot book that interest into our profit and loss account. Let us now discuss, friends. So what are the income recognition norms in case of restructured account? Restructured account classified as standard assets on accrual basis. After restructuring, which is standard assets? Only additional finance. So any additional finance we have given it, on that we can charge interest on accrual basis. On accrual basis. And restructured account classified as NPA on cash basis. Means all other accounts, existing account, which after restructuring has become NPA. NPA account, which after restructuring remains NPA. On that portion of loan account, we can charge interest on cash basis only. Unless the borrower make payment to us, we cannot book interest into our profit and loss account. So friends, Now, in case, yeah, what does Reserve Bank of India says? In case of additional finance, where pre-restructuring facilities were classified as NPA, the interest income shall be recognized by only on cash basis, except. So there is certain exception also. We can charge interest on accrual basis also. When, friends, when the restructuring is accompanied by a change in ownership. Now that uh, borrower has taken loan under consortium from different banks, many banks. What is consortium? There is one borrower and 10 banks, 10, 12 banks are there. The 10, 12 banks have jointly given loan to a borrower. Or it can be multiple financing also, multiple banking financing also. They have given loan to a borrower. Now that in the consortium meeting, all the banks lenders, they decide that due to this promoter, the account has become NPA or the account is finding some types of financial difficulty because that promoter is not a capable person to run that unit. And 75% stake is with the banks. So banks have to recover their amount also. So in the consortium meeting, all the banks decide that let us remove that promoter and induct a new promoter to run this company. And they can do it. Lenders can do it. Remove the present promoter and induct a new promoter. Now, when a new promoter comes, why the banks have inducted a new promoter? That he will run the unit efficiently. And if he runs the unit efficiently, then bank will be able to recover their amount. When the new promoter comes, what he will say? He will say that if you give me a bundle of loan account or NP accounts, if you give me a bundle of NP account, I will not be able to run that unit. So you have to give me certain facility, certain leverage you have to give me. So if you remove that NP tag from it, only then I will come forward and run that unit, and then you will be able to recover your amount. So what does RBI says? That if there is a change in ownership, if there is if credit facility, if the after restructuring there is a change in ownership, then credit facilities may be continued or upgraded as standard after change in ownership is implemented. What does it mean? If standard account is restructured, it will continue to remain standard asset. If NPA account is restructured and there is change in ownership, then NPA account will also be upgraded so that new promoter who is coming, he will get good standard account and he will be able to get more finance from the banks. So what? That means credit facilities will be continued or upgraded as standard assets after change in ownership is implemented. But friends, there are certain conditions attached to change in ownership. What are those conditions? That the acquirer, the new promoter, acquirer is not a person disqualified in terms of Section 29A of Insolvency and Bankruptcy Code 2006. The new promoter is not disqualified under IBC 2016. Number two, new promoter shall have acquired at least 26% of the paid up equity capital of the borrower entity and shall be the single largest shareholder of the borrower entity. With the new promoter which is coming, his shareholding should be at least 26% and he should be single largest shareholder. Only then he will be considered as a new promoter. Otherwise, he will not be considered as a new promoter. A new promoter shall be in control of borrower entity as per definition of control in the Companies Act 2013, regulations issued by SEBI or any other applicable regulations. Means he should be having full control over the company. He is not working as a dummy of any other company. Only then it will be treated as new promoter. Means he should not be disqualified in terms of IBC 2016. He should have acquired at least 26% stake and he should be single largest shareholder and he should be having full control on the unit. Only then it will be treated as change of ownership. Friends, now, whenever there is a restructuring, we give certain types of credit facilities also to the borrower. What are those credit facilities? They are WCTL and FITL. What is WCTL? Working capital term loan. What is FITL? Funded interest term loan. Let us discuss what is WCTL. When we give WCTL, working capital term loan, whenever there is a reduction in limit, what does it mean? Now that as per projected turnover method, NIC committee, we have accepted that projected turnover will be 100 lakhs and based upon our acceptance of projected turnover 100 lakhs, we have sanctioned them credit facility of 20 lakh. What does NIC committee says? 20% you can give of the projected turnover. 20 lakh we have given limit to him. Now, every year limits are required to be renewed. The next year when we are going to renew the credit facility, we have found that he has achieved a turnover of 50 lakh only, whereas projected turnover was 100 lakh. He has been able to achieve 50 lakh only. Now, we are going to renew it. For the next year, this 50 lakh is the base. So on above 50 lakh, he will give the projected turnover, projected sale next year, how much he will be able to achieve. So based upon discussion with the borrower, we found out that next year he will be able to achieve a projected sale of only 80 lakhs. Only 80 lakhs he will be able to achieve. Now, as per NIC committee projected turnover method, we cannot sanction him credit facility more than 20% of 80 lakh. Now we will sanction credit facility of 20% of 80 lakh comes to 16 lakh. But already he has obtained, he is availing 20 lakh credit facility, CC limit. If we ask him that you deposit 4 lakh rupees immediately, then he will say that I am already in financial problem. That's why you are restructuring it. And if you ask me to deposit 4 lakh rupees, from where I will bring this 4 lakh rupees? So I will not be able to give you any amount right now. But RBI guidelines say you cannot give him more than 16 lakh. Already is availing 20 lakh. So how to sort out this problem? So what you will do? You will reduce the limit from 20 lakh to 16 lakh. And this 4 lakh rupees which he has already availed. So friends, this 4 lakh rupees we will sanction him WCTL, working capital term loan. And from this disbursement, we will adjust the CC limit. And we will ask the borrower, you pay this WCTL in equal monthly installment over the next 5 years. 5 years, 7 years, whatever we decide. You pay. This is called, we give WCTL whenever we have reduction in limit. Number 2, reduction in drawing power. Same thing. We have accepted the projected turnover 100 lakh. We have sanctioned them credit facility of 20 lakh. Account is going very good. Everything is going on very good. And one day, this is furniture industry. One day, the fire breaks out in the unit and furniture gets burst down. Most of the furniture. Earlier, how he was availing that limit? He was submitting the stock statement 30 lakh, and after adjusting our margin, his margin, we were allowing him drawing power of 20 lakh. Now this month, he has deposited stock statement of 20 lakh. His margin is 25%. So if we reduce the margin, then we calculated the drawing power 15 lakh. Stock statement 20 lakh. So drawing power is 15 lakh. But balance outstanding is 20 lakh. He is already enjoying credit facility of 20 lakh. If we ask him to deposit 5 lakh rupees, then he will say that there is a fire in my factory. Already most of the stock has been burned down. I've lost the insurance claim. How much time it will take to get the insurance claim, I don't know. Till that time, should I close my unit? You allow me to run the unit? From where will I from where will I bring this 5 lakh rupees? I will not be able to give you 5 lakh rupees. So in that case, we cannot give him drawing power more than 15 lakh. Balance outstanding is 20 lakh. Then we will sanction him WCTL, working capital term loan of 5 lakh rupees, and adjust CC limit by 5 lakh rupees, reduce the drawing power to 15 lakh, and ask him to pay this WCTL in equal monthly installment for next 5 years. Next coming is interest overdraft. Now, FITL, funded interest term loan. Now the balance outstanding is 100 lakh. Interest has been applied. Balance has become now 110 lakh. Now we are required to do restructuring. And this 10 lakh portion is due to application of interest. Application of interest. So friends, when we are restructuring it, so we are keeping the limit at the same level, 100 lakh. And how to adjust this 10 lakh interest portion, which is overdrawn? We sanction him FITL, funded interest term loan, and adjust this overdone portion of 10 lakh. And we ask him to make payment of FITL in equal monthly installment in 5 years, 7 years, whatever period. So this is interest overdraft. Number 4, granting moratorium period to service future interest. Now what happened during COVID period also? What happened? We asked all the borrowers that we are giving you blanket moratorium period. You don't pay us anything. When they don't make anything, did we stop charging interest in the account? No. We continue to charge interest in the account, but he is not making payment to us. And he is not making payment to us, and we are charging interest. From where we will recover the interest? So, whenever we are charging the interest, we are sanctioning him FITL. From the FITL, we are debiting his account, FITL account, and adjusting our interest, which we are charging. We have not allowed him. We have not written off the interest portion. No, we have only said that for 6 months, don't pay us interest. And after that, you will have to make payment of interest also. So interest was not written off. Basically, a new facility of FITL was given that you make payment afterwards. This is how we give WCTL during restructuring. This is also we give FITL during restructuring. Now, friends, now this is one exercise. Now, in this case, CC limit is 100 lakhs. Present balance outstanding is 150 lakhs. Why? 15 lakh interest has been charged due to interest application. Balance outstanding is 150 lakh. 15 lakh is the interest portion. Due to failure of business, new limit is 70 lakhs. Now we have reduced the limit from 100 lakh to 70 lakh. Rate of interest after restructuring is 8.5%. We are charging 8.5%. So borrower has requested for a moratorium period of 2 years to service any interest. Borrower said that I will not make you payment of any interest for the any interest for the next 2 years moratorium period. Then how much WCTR we will give him? How much FITR we will give him? Let us see how we will calculate it right now. CC limit is 100 lakh and FITL is, reduced limit is 70 lakh. It is 70 lakh. Let us now see to. We will give him WCTL of 30 lakhs. How WCTL of 30 lakh we will give him? Already limit was 100 lakh. We have reduced it to 70 lakh. So 30 lakh WCTL, because reduction in limit is 30 lakh, we will give him 30 lakh WCTL. We will give him 2 FITL. One FITL of 15 lakh. Why? Because already balance outstanding was 115 lakh and CC limit was 100 lakh, 15 lakh was due to application of interest. This 15 lakh we will sanction him FITL. So this is FITL. And we will give him another FITL also, FITL 2. What? Why? What he said? The borrower has requested for a moratorium period of 2 years to service any interest. For next 2 years, he will not pay any interest to the bank. Will the bank not charge interest? Bank will charge interest, but he will not make payment of interest. So friends, so interest on new CC limit of 70 lakhs, he will not pay. So new CC limit of 70 lakhs for 2 years at 8.5% comes to 11.90 lakhs. So whenever we charge interest, we debit the FITL. Interest on CC limit, we debit the FITL and adjust our interest portion. Number 2, on WCTL also, this WCTL also, interest on WCTL for 2 years at 8.5%, it comes to 5.10 lakh. Whenever we charge interest on WCTL, we will debit FITL and adjust our interest. So 11.9 plus 5.1, 17 lakh interest FITL we will sanction him FITL 2. Total FITL we will sanction him 15 lakh plus 17 lakh 32 lakh, and total WCTL we will sanction him 30 lakh rupees. So friend, this is how we do restructuring of loan accounts.